Distell saw an increase in its revenue for the first half of its financial year, which ended on the 31st of December 2011, up 16% to 8 billion rand. This while global sales growth and a more favourable exchange rate served to boost Distell's year-on-year operating profit by 22%. A little earlier today, we spoke with the Group MD, Scannell, to find out a little more.
The local currency helps us in the sense that we've got a fairly large percentage of our business which conducted outside South Africa on an export basis, and the weakening of the rand earnings from our export business have grown. It also has a negative effect on the cost structures. Things like bottle costs are influenced, some raw materials costs are influenced, labour costs are influenced by the weakening of the rand, and what has a substantial effect is the increase in the price of fuel. But in total, we benefit from a weakening in the local currency.
Well, let's also just touch on the operating expenses, because that has increased by around 15%. You say that the fact that we saw revenue growth up almost 16%, you're quite comfortable with regards to the operating profit. Why are operating expenses up so significantly? You're talking about raw materials as well as fuel. What other impacts did you see there?
Outside the sort of input cost that goes into the business, the other part of the operating expense has grown. We have continued to up our investment behind our brand supporting activities in the marketing side, sales structural side, marketing structure side, both in the local market and the international market, has had a direct effect on operating expenses. But that was a planned strategy.
Domestic revenue has also increased quite substantially. We know that overall in the domestic market, we've actually seen a bit of softening. This seems to have recovered. That was up around 15%. Sales volumes up significantly as well. Are you expecting this kind of performance into 2012?
It's very difficult at the moment to forecast the performance going forward. We are to a large extent dependent on trading conditions within the market in total. We believe that trading conditions will remain tough. The sort of export performance and profitability is dependent on the strength of the South African rand or the weakness of the South African rand. So to make forecasts beyond that's extremely difficult.
What's also quite interesting is when you look at the very strong performers, it's actually perhaps at the higher end of the market. Let's look at some of the brands that did quite well: Nederburg, Two Oceans, and then Fortified Wines as well, and Sedgwick, Old Brine Sherry. Also that perhaps slightly in the middle of the market. Do you have quite a bit of leeway as to what the trends could be into this year?
But it's interesting, in general, we believe that the consumer market in alcoholic beverage is still buying down. But strong brands are within this environment where the consumer's expenditure is under pressure benefiting. That the consumer in general, we believe, is looking for value for his money. He's looking for products and brands that he trusts. So if you do know well-known brands like, say, Sedgwick, Old Brine Sherry, more the mid-income price range, and yet a bit more to the upper end, and the Roulette Cream that's relatively expensive. And also the cider brands that are within the broader categories relatively expensive. The consumer trusts the brand, he believes in the brand, and is prepared to spend on them.
Absolutely. Well, let's just touch on spirits as well, because that was basically on par with what we saw in the previous year.
That's correct, yes.
Would you say that this is now also expected as the performance that we'll see into this year? We've seen retail sales starting to increase quite significantly over the last few months. Do you expect that it's going to start to have an effect on the spirit side of things?
The spirit side of things, we've probably seen the most material buy down within the consumer environment. And performance, we're very dependent on the performance of the economy. From our side, we will continue to support the strong brands, we'll continue to promote the strong brands, and we'll have to see how the consumer reacts.
With regards to competition, we know that SAB has been on the front foot with regards to ensuring that they take more market share. Is this a concern for you going forward, and have you put various strategies in place to ensure that you not only keep your market share but actually grow it?
We've always got to take note of what is happening in the market in total and what the competitors are doing. The South African alcoholic beverage market is an extremely competitive market, and in that respect a very interesting market, and SAB is a company that we've got great respect for. So we've got to take note of what they do, but on our side we've got to have strategies, and we've got to plan to not only maintain our market shares but to grow them.
Yeah. Africa is an exciting market. We saw fantastic growth coming through there, up around 63.3%. Again, it's also fascinating to note that it is a very highly competitive market. How have you made headway within this space?
We've over the past number of years invested behind structure in the sense that we've put more and more people into the African environment, both people from South Africa, but probably more importantly establish local infrastructures within the market, training people within the market, and working with local partners. And we've also upped our investment down brand building activities within the markets over the past number of years. And what we're seeing at the moment is the results from investing in people and structure and in brand building in markets.